Bombay Stock Exchange Brokers Forum was incorporated in the year 1993. BSE Brokers Forum is a society under the Societies Act 1860 to support and coordinate on behalf of Brokers Forum. It facilitates for the smooth functioning of trade and business. It is the link between the regulators and other government bodies relating to the markets. Brokers Forum has time and again come up and made representation for the larger interest of communities. India is seeing and experiencing an economy so dynamic and ever-changing that Brokers Forum is acting as a facilitator in filling the gaps so that the business may shore up their competitiveness and enhance their global reach.
Wishes for the day to all the members of the Bombay Stock Exchange Brokers Forum. Today we are going to speak on the upcoming goods and services tax in India. The objective of this short session is to give brief about goods and services tax, that is GST, and we will try to see that what is that is in GST for brokers community. What is GST? GST is going to be a destination based consumption tax. So wherever the goods and services are going to be consumed, the taxes will travel to that particular state. For example, that if some services are being received by a resident of Maharashtra from a service provider from Gujarat, the consumption of that service is going to happen in Maharashtra. Hence, though the service provider is located in Gujarat and he will pay tax to government of Gujarat, the tax has to travel to Maharashtra because the consumption of that service has happened in Maharashtra. So this is what GST is going to bring in, the consumption based taxation. So what GST is going to do is, as far as the broking community is concerned, you are paying service tax on pan-India basis and entire India is one jurisdiction. In GST, the jurisdiction would get divided in 29 states and the 6 union territories. Before we dwell upon this, let us understand that why are we having GST. If you look from a broking community perspective, the current tax regime where the broking community pays service tax, whatever taxes you are paying on goods in the form of VAT, they are not creditable and they become the cost. In case of GST, the fungibility of tax will come in and you will be eligible for credit of all the taxes which you will pay on goods and services. Our country having been the federal structure, states tax certain transactions and the center taxes certain transactions. Currently, center, if you take broadly and key items, center taxes activity of manufacturing, activity of provision of services, interstate sale transactions. State levies tax on sale of goods, on entry of goods into a particular state or on entertainment, and we also have taxes in the form of luxury tax. These taxes will get subsumed in GST. In place of excise, CST, service tax, you will have central GST. In place of state VAT, entry tax, entertainment tax, luxury tax, you will have state GST. And the taxing transaction which you currently pay on provision of service, the taxable event is going to happen supply of services or supply of goods. So whenever you will receive a supply of goods, the vendor would charge you GST. Whenever you in turn will supply services as a broking community, you will charge GST. The question which comes up is that, are you going to charge a single GST or there is anything more than single GST? As I mentioned that the taxes of center will get replaced by CGST, which is central GST, and on the state side the taxes will get replaced by state GST or SGST. Every supply will attract both the central GST and state GST. What it means is that as a broking community today, you are charging service tax alone on your provision of services, or that's the only tax you are charging. Once GST is implemented, you will charge central GST and state GST both. To put it further simplifying, the service tax as one line item currently appears at 14%, presuming the tax rate is 20% and it's equal between central and state. Then you will have two line items, central GST at 10% and state GST at 10%. And that's how the invoice will also appear. However, in case of a transaction which we took an example of Gujarat to Maharashtra, this will be an interstate transaction. And in place of CGST and SGST, there will be a tax called integrated GST. So that transaction from Gujarat to Maharashtra, an interstate transaction, will attract IGST, an integrated GST. Let's continue our example of 20% rate. Then in that case, in the invoice, you will charge IGST of 20%. Now, we are assuming that countrywide tax rate is going to be same. So to summarize, an intrastate transaction will attract CGST and SGST, and an interstate transaction will attract IGST. We spoke about the rate of GST. Let's spend some time on that. Currently, the rate of service tax is 14%. As far as the rate of tax is concerned, if we look at the earlier government regime where Dr. Pranab Mukherjee was the finance minister, the proposal was that there will be a standard rate of tax on services at the rate of 16%. We have also heard some time back about the rate of 27%. And recently the Select Committee of Rajya Sabha suggested that the standard rate of GST should not be more than 20%. So if we take that 20% for the purpose of our discussion today, then the rate of service tax or the rate of tax on services is likely to increase from 14% to 20%. It doesn't appear that the rate will go anywhere below 18. So for the purpose of computing the impact on your businesses, you can take for time being 18 to 20%. We understand that there are certain transactions in your business where you pay tax or you don't charge tax, or the broking charges which you offer to your customers or a class of customers is inclusive of taxes, and hence the taxes are considered within the broking charge, and ideally you pay it from your own pocket. That is what the understanding is of the broking community. So if the tax rate increases from 14% to 18 or 20, that is the additional hit which it may have to your bottom line unless you relook at your commercial arrangements with your customers. So the big impact to the broking community, to my mind, is the rate of tax. The increase in rate of tax is what needs to be factored in the business impact at your end. It may alter your top line, it may alter your bottom line. That needs to be considered. The next big thing is place of supply rules. As we mentioned that the country is going to get divided for the GST purposes, for tax purposes. Instead of a pan-India tax of service tax, you will have a CGST and SGST. So the question will be that if I am a broker who is a pan-India broker situated out of Mumbai and has branches across the country, and let's say I am present in all 29 states with a branch, and I have business customers and I have retail customers. Each branch caters to the retail customers of that particular jurisdiction. Let's say for Rajasthan, branch caters to the retail customers of Rajasthan. And also there could be certain institutional investors or institutional customers who could be either the customer of the head office located at Bombay, or it could be coming through via the branches. The question which will come up is that where will you discharge the tax for a service which is getting rendered from Rajasthan to a retail customer in Rajasthan, or from Rajasthan for that matter to a retail customer in Delhi. So will it be basis the location of the customer? In this example, for the services which are rendered of broking from Rajasthan branch to a retail customer in Rajasthan, that tax will go to state of Rajasthan. And in an example where the Rajasthan branch is rendering to a retail customer in Delhi, should it be going to Delhi or should it be going to Rajasthan? Or would you look upon a third scenario saying that, okay, fine, all my contract notes are being printed from Bombay for the pan-India basis, and hence I would desire to pay tax in Mumbai or in the state of Maharashtra, which I understand most of the broking community does currently, that for the entire pan-India business, you pay the taxes with central registration at one particular jurisdiction, most of them having head offices in Mumbai. So the place of supply, these will come in the form of the rules, and they will define that in our services of broking community where we act as an intermediary, will it be the location of the service provider? Will it be location of the service recipient? We will have to wait and see. If it is location of service provider, will it be the Rajasthan branch which is catering to the customer, or will it be Mumbai from where the contract notes are printed? And if it is based on the location of the recipient, then in our example, one example, the customer was located in Rajasthan, in another example it was located in Delhi. So that would be the place of consumption, and that is where the tax has to travel. So presuming that the Rajasthan customer and Delhi customer, if we take, and that's the place of consumption, then the Rajasthan branch has to charge CGST and Rajasthan GST to the Rajasthan customer, and it will have to charge IGST to the Delhi customer. So that will be the change as far as the place of supply will bring in. The next key change will be in the IT systems. Obviously, currently you print contract notes and you have an IT system, IT base. Now that system will have to change, obviously, having understood these examples, that today my contract note cum invoice is getting generated, the service tax appears in that contract note itself, then it will get replaced by CGST, SGST or IGST as applicable, and the contract notes will have to ensure that depending upon the place of supply, they are reconfigured in the manner such that the right taxes are getting collected. So the software which you are using for contract notes, where the contract note cum invoice is getting generated as a common document, that will have require alteration. And accordingly, software which you use for contract note, which talks to your accounting software, that will also need a change in the integration to that extent. So the three key aspects which in my mind will have to be looked upon by the broking sector is the rate of tax, the place of supply rules, and the changes in the IT environment. There will be a lot other things, but these three things appear to be prominent to me. The next question would be that when is GST going to be implemented? Is it going to be done on 1st April or 1st October 2016, or will it go up to 2017? Recently, we have been hearing the finance minister and the prime minister making statements that it will get implemented in 2016. My guess is that April 2016 looks now a bit difficult with the parliament session in monsoon got washed away. Even if the bill gets approved in a winter session, which may be preponed to November, the implementation of GST in April looks difficult. And I would urge the businesses actually to request the government, if they are ready, I don't think so the businesses are ready to implement GST in April. So the ideal date would be October 2016 for all the businesses to implement. I guess the broking community could be ready by July also, but if you look at all the businesses, the October looks to be an ideal date. Can it be implemented in the mid of the year? Yes, it can be implemented in the mid of the year. This is not of something tax which goes from financial year to financial year. It is a transaction based tax. It can be implemented from the mid of the year. In certain countries it has been done. So 1st October looks to be an idealistic date where GST can be implemented. What is going to be the roadmap about GST? When are we going to get the laws? How is it going to happen, the entire journey? Recently, government had released the documents of the joint committees, the joint committee reports, which is on registration, on refund of taxes, on payment of taxes. Now, what appears from this action of the government is that they may not wait for the GST to be passed in the parliament, and they may release the model laws. So what is required by the government is that they need to release the model laws, which the businesses has to give comments to the government, and then post those comments they will finalize the laws. So draft laws will be available to the businesses. There will be an opportunity to give feedback to the government on those draft laws or model laws, and then the laws will get finalized. Basis the draft laws or the model laws, the businesses can plan the business affairs, can look at the impact, can re-strategize on the entire business aspects, can renegotiate with the vendor, with the customer, and can start making changes in the IT system and the accounting system and the other things. So this is, in short, in brief, is likely to be the journey. I really congratulate the BSE Brokers Forum to take this initiative to create awareness about GST amongst the members of the forum. We would be happy to take any questions. I would request the members, you can write your questions to the forum, and I would be glad to respond to them. Thank you for your time for hearing this. Thank you, members.